Hi there, welcome to Grain TV. It's Monday, July 18th, and we had a topsy-turvy day in the markets. We started much lower on beans, down as much as 20, but closed the day higher. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn up 4 3/4, wheat up 3 1/4, and beans front month August up 4 1/4. New crop November up about 8 after being down as much as 20. And really the driver today was both to start the night session last night as well as mid today was the weather models. Coming into last night's trade, the weather models look favorable for the second half of July. Pretty cool temperatures, pretty good moisture for much of the country in the key growing areas. But as we got to that midday run in the weather model, things looked dramatically different. In particular, what we saw was a model that showed much higher temperatures going out into the Midwest early next week, as much as 15 degrees above normal. And in addition, this new run that came out this morning was much drier all the way from eastern South Dakota into Indiana. So that turned what was once a down day in the bean market to a positive day, and especially in new crop November, where we closed much stronger on the day. Other news out today, we had export inspections that came out. Before we get to that, let's talk about the USDA's crop condition numbers that will be out later today. Most analysts look for pretty much same numbers as what we had last week. 75% of the U.S. corn crop is expected to be good to excellent, down only slightly from last week's 76%. So that's what analysts are looking for, is a 1% drop in corn ratings. In soybeans, they look for a 71% good to excellent, unchanged from last week, and those numbers will be out later. So watch for those on Twitter, on our Grain TV Twitter page. In terms of export inspections, these were pretty much a non-event, although corn was above expectations just slightly at 1.327 million metric tons. Again, above the high end of analyst expectations. Beans and wheat coming in within analyst expectations. As we look at sort of the export scorecard, in particular for old crop corn and beans, we had USDA revise their export numbers higher, especially in corn. We're now actually looking for a year-on-year increase in corn exports compared to 2014. So, right now the USDA is pegging us to end the year 1.9% above last year. If we look at so far year-to-date export inspections versus last year, we're running at a 3.4% decline. That is better than we were a few weeks ago when we were 5% below, but we are running out of time. We only got a month and a half left in the marketing year. In beans, I think it's a little worse off because we have sort of a slow pace to exports going into the latter half of this year. Corn has had a really strong pace going into the latter half of this year, but beans are ending weak. So we are nearly 7% behind last year's pace. USDA looking for only a 2.6% drop. Now, when we look at wheat, keep in mind this is only a month and a half into the new crop 2016 season, but we're doing much better than we were compared to last year's very dismal performance. So USDA is looking for a 19% bump up in exports for this year versus what we're doing so far. Again, only a month and a half into the new crop year, but exports are up 30% over last year. And speaking of that, I think one of the big things that may help the wheat market as we get past harvest is the really changing price spread situation between us and some of our major competitors. We've talked about this all of last year when we were really suffering and really struggling to move any sort of significant wheat into the export market, that our premium, or that the U.S. wheat price was at a premium, especially when we look at France's price. So overall, most of that year we saw anywhere from a $30 to $40 metric ton premium for U.S. wheat versus French wheat. That has changed fundamentally. First of all, the really big drive down in wheat prices as a result of the good crop in the U.S. Likewise, France's crop has not been as good, so their prices have gone up. So as we look at the most recent comparison of U.S. to French wheat prices, instead of it being $35 to $40 a metric ton premium to the U.S. It is now about a $14 metric ton. That should be very favorable as we move into the marketing year and try and move more exports into the world market. Let's switch gears and talk about beans. We've had a big range here in beans. Today's range was about 30 cents, not unusual in light of what we've been doing here in weather terms, and obviously in light of the big rally we've had since March 1st. So, as we look at this market, keep in mind that it's very volatile. A lot of mixed signals going on here, but overall, I think there is still an upward trend in this market. We traded down to that 1033 mark on New Crop November. That was the low we established yesterday, and we quickly moved higher, and we got some fresh news from that weather model midday to really drive us up to the high end of the range. So keep that in mind. I think probably the next price objective as we sit around 1069 is going to be around 1080. That has proven as overhead resistance at some points during this trade. So look for 1080 as sort of the next mark we need to clear to keep this range intact and keep us moving higher. But overall, I think the bean market may react to more drier and hotter weather forecasts as we move forward into the second half of July. That's all we got today on Grain TV. As always, if you want to learn how we can help you in your own trading and grain marketing situation, visit us online at grainhedge.com. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.